In this episode of the FXTM Educational Series, we're going to be taking a look at reversal patterns. Now, before we dig into reversal patterns themselves, let's review the concept of a trend, which is what a reversal pattern is identifying as changing. So a trend is defined as a series of rising bottoms and rising tops for a bullish trend, or falling bottoms and falling tops for a bearish trend. In fact, let's take a look at a really good example of a classic bearish trend on the next chart. Now, as you can see here, we have very clearly defined falling tops and falling bottoms. This is an obvious downtrend. What we're going to do in this video is to identify reversal patterns that help us to understand better when a trend like this is likely to reverse. Reversal patterns tend to fall into two basic categories. So the first of these are bearish and the second are bullish. Now, to start with, I'm going to take a look at these three technical patterns here. This one is called a double top. This one, as you might imagine, because it has three tops, is a triple top. And this one is very similar, except that the tops are uneven. So this one is a head and shoulders pattern. The biggest difference here is that the shoulders are not even with the head of the pattern. So each one of these could be considered a bearish technical pattern, something that's identifying an end to the previous trend. So if it was positive, then we're looking for signals that that bullish trend is likely to end. Now, one of the things that we're looking for here, of course, to identify or to confirm a reversal pattern is when it actually breaks out. So with a head and shoulders pattern, this one would break below the bottoms in between the three tops. So in this case, we actually call that the neckline of the head and shoulders pattern. And the same thing would be true here with the triple top. When it breaks below the bottoms in between these tops here, or with a double top, as it breaks below just the single bottom that was in between those two tops. So we're looking for confirmation as well as the uniformity of the pattern. We want to see something that looks like we would expect it to look as much as possible. So there is some latitude, but we want to avoid as much ambiguity as possible. Now, once a technical pattern or a reversal pattern has been confirmed, how do we make an estimate as to how far we think the trend may reverse? It certainly could exceed this and it may fall short, but a good rule of thumb is to use the measure rule. Now, the measure rule looks at the height of the pattern. So let's say in this case with a double top, we're looking at the height or the depth of the pattern, and then we project that same distance down from the breakout point. Now, with a head and shoulders pattern, this is just a little bit nuanced because we're basing this on the height of the middle top, which is uneven, unlike what it is on a triple top or, of course, a double top. But we would project that to the downside. This is called the measure rule and is a good general guideline for making an estimate as to how far do we think the price is actually going to fall. In fact, let's take a look at a double top with its projection or measure rule applied in the next chart. So here you can see a classic example on the euro to the US dollar of a double top, which subsequently broke below the bottom in between those two tops. And although it exceeded the measure rule, that was a good guideline to use to make an initial estimate. Bullish reversal patterns are just a mirror image of their bearish counterparts. Now here we have some very similar patterns that you can see on the board. This one would be a double bottom, a triple bottom, and again, a good guideline is to always make sure that you're being as picky as possible about how uniform the pattern is. And then of course, here I'm just going to abbreviate this as an I for inverted head and shoulders pattern. Now here we want to make very similar judgments about when the pattern is actually complete. So with the inverted head and shoulders pattern, we're looking for it to rally once it breaks beyond that neckline. But here we're looking at a prior negative trend that then resolves itself into a positive trend to the upside once that neckline has been complete. Now the same basic rules of thumb as far as a measure rule would also apply. So we measure the depth of the pattern, so from the neckline to the depth of the bottom here that forms the head, and then we would make that projection to the upside. Now the same thing would be true, of course, here with a triple bottom, where we want to identify a breakout to the upside, make an estimate as to how far it's likely to go once it's broken beyond the tops here that formed in between these bottoms. And we're going to measure the depth of the pattern and then project that same distance to the top, and we would do that same thing here with a double bottom. So everything is very similar to what we did with the bearish versions of these patterns, except in this case we've just flipped everything upside down looking for a bullish completion. In fact, let's take a look at an example of an inverted head and shoulders pattern, how it completed and what it looked like when it resolved and hit its price target. You can see this example of an inverted head and shoulders pattern with the prior downtrend. We get our three bottoms that are a little uneven, with the middle one being the deepest, so it looks like someone hanging upside down, and then a subsequent breakout from the pattern itself. Now, a little volatility on the breakout, which you can see here, is not unusual and doesn't necessarily invalidate the pattern. Now, if we measure the depth of the pattern, it gives us a good estimate as to how far it's likely to go. Reversal patterns can take a little bit of time to get good at identifying consistently and successfully, but remember a couple of key guidelines. The larger they are and the more uniform they are, they tend to be more predictive in their potential outcome. Use the measure rule to identify your potential upside or downside after the breakout of the pattern, and wait for that completion before assuming that the pattern is in fact going to reach its measured objective.